Hello students, now this is Dr. T.G. Uma from Maharani's College with session 8 on Unit 1 in Advanced Corporate Accounting. I will be covering a problem on the redemption of preference shares. Now let us go with this. The Spotlight Limited has issued share capital of 60,008% redeemable cumulative preference shares of rupees 20 each and 4 lakh equity shares of rupees 10 each. The preference shares are redeemable on 1/1/2005. As at 31st/12/2004, the company's balance sheet showed the following positions. So you have the issued share capital to be 60,008% redeemable preference shares. So it is fully paid up. This is very important. If you are redeeming the preference shares, you will have to take care that if it is partly paid up, you'll have to call up the amount which is uncalled. So you have 4 lakh equity shares of rupees 10 each, profit and loss account and the creditors on the liabilities side. Coming to the asset side, you have plant and machinery, furniture, fixtures, stock, debentures, debtors, then the investments and the bank. So cash at bank, okay. So going with the additional information, in order to facilitate the redemption of preference share, the company decides to sell the investment. So whenever an organization or a company wants to redeem the preference shares, it has to arrange for the funds. So if it is already having sufficient funds, then is no need for it to get the money. So the finance, as far the funds are considered, it can be through the selling of any asset, or it can be through the fresh issue of equity shares, or it can be any other arrangement that the organization uh, thinks about. Okay, so these are all the ways to finance part of the redemption from company's fund, subject to leaving a balance of 2 lakhs in the profit and loss account. So here the organization is thinking to keep a tax of 2 lakhs and utilize only the 5 lakhs for the redemption. So whenever organization looks for the redemption of preference shares, so P&L account balance, whatever is existing, that will be used, and the amount standing there will be transferred to the capital redemption reserve to issue sufficient number of equity shares of rupees 10 each at a premium rupees 2 per share to raise the balance funds required. So here it is going for fresh issue of equity shares as well as selling of the investments. The preference shares were redeemed on due date, equity shares were fully subscribed. So here the organization is issuing the fresh equity shares. So that is also taken care of, and that is subscribed also. Now let us look at the journal entries which we'll have to go with. So preference share capital account. So this is the amount that the organization has to pay to the preference shareholders. So preference share capital account is closed and they become the creditors. So the amount that is there will be due to the preference shareholders account. So next is, so the investments are sold at 3 lakhs. So if you check in the balance sheet, the investments are around 3,50,000. So 3 lakhs is what is the amount that is realized, and 50,000 is a loss. So whenever there is a loss in the sale of the asset, so that asset loss is transferred to the P&L account. So 3 lakhs is the amount that is got from the sale of the investment. 50,000 is a loss, and 3,50,000 is the amount that is realized. Amount that is closed that we had in the investment account. Next one is the bank account debtor. So this one is the amount that they receive from the equity shareholders. So they have been issued at a premium. So whenever we receive premium account, that is the amount that is collected towards a premium that is separately transferred to the securities premium account, and the equity share capital is only credited with 7,50,000. So here the profit and loss account is debited to capital redemption reserve. So already you have a loss of 50,000. So here we had 7 lakhs. 7 lakhs minus 50,000 is 6,60,000. So here the organization wants to maintain 2 lakhs. So 4,50,000 is what we are having. So here 4,50,000 is transferred to the capital redemption reserve, which is used for the redemption of preference shares. So next one is the preference shareholders account data to bank account. So they are paid up. Now I will have to work out the bank account as well. So now let us look at the thing here. So bank account. So previously, if you check in the balance sheet, 3,50,000 was what is the amount that was there. So 3,50,000 is amount. So we have sold. If you check here, you'll get to know the accounts, bank account wherever it is involved. So here bank account is debited. So it is debited to investments for 3 lakhs. Then again we get the amount from the equity shareholders. So the amount is 9 lakhs. So the 9 lakhs amount is entered here, equity share capital account. So then on the securities premium account, so here bank account is debited with two amounts here. Totally it is 9 lakhs. By virtue of equity share capital is 7,50,000 and 1,50,000 rupees is towards the securities premium. So this cannot be clubbed. So you need to maintain the nominal value, face value of the equity share separately, and the premium account is separated and the amount received from them is shown differently. So totally it is 9 lakhs. Coming down to the credit side here, you are paying 12 lakhs to the preference shareholders. After paying to them, the balance left over in the bank account is 3,50,000. Going with the investments, investments is an asset which always shows the debit balance. So 3,50,000. So by bank account, 3 lakhs is the amount at which it is sold. So 3 lakhs and 50,000 is a loss because of the sale of the investment. So this is shown here. So next is a profit and loss account. So by balance brought down is 7 lakh and the capital redemption reserve. So it was very clearly told in the problem that the organization wants to keep intact 2 lakh rupees. So balance that they want to carry forward is 2 lakhs. This is pre-decided. And the investments which are sold have incurred a loss of 50,000. So capital redemption reserve account is 4,50,000. This is amount that will be utilized to pay towards the redemption of the preference shares. So coming down to the preference share capital, so by balance brought down, it will have a credit balance since they are the creditors. To preference shareholders account 12 lakhs. Equity share capital. So already the organization had 40 lakhs. 7,50,000 is a nominal value, face value of the equity shares by fresh issue of equity shares. Is it not? So if you add up these two, 47,50,000 is what is the balance which we'll have to carry for the liability side of the equity share balance sheet. So if you look into the share capital account, equity share capital is 47,50,000. Share premium account is left with 1,50,000. Profit and loss account 2 lakhs. Capital redemption reserve is 4,50,000. So there is no change in the sundry creditors. So that is written as it is, and 66,50,000 is what you get on the liabilities, capital and liabilities. Going by the asset side here, investments have already been sold. So plant and machinery is untouched, so it will be as it is. Furnitures and fixtures are as it is. Coming down to the current assets, you have stock 15 lakhs, sundry debtors 14 lakhs. Cash at bank, we can refer to this particular ledger, and that is taken here. So if you total it up, it works out to 66,50,000. So both the assets and the liabilities I should have to tally. So this is about this problem. So thank you.